Welcome to the 44th episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore high yield shares, dividend growth strategies, and portfolio management techniques to maximize your investment returns. Subscribe now and take care of your financial future with the power of dividends. In the episode today, we will continue to look at the portfolio that we have built and see as to how it has progressed in the last 2 weeks. We could not do an episode last week. However, we will try and cover up some of the key updates from the last week in this episode. However, like always, we'll start with a quick recap of the markets. The markets overall performed well, with S&P 500 gaining 129 points to end at 5,911 points. Nasdaq too went up by 491 points to end at 19,113 points. And here locally in Australia, ASX 2 did well to end 74 points higher at 8,434 points. However, as I've always said, stock market share prices will go up and down all the time. However, you as an investor should invest in companies that have the ability to pay dividend now, pay dividend in future, increase the dividend in future, and are fundamentally strong. Anyway, with this background, let's do a quick recap of the portfolio that we had built. We had first bought KDP 50 at 37.46, then we bought JP Morgan Chase 10 at 210.5, then we bought AT&T 100 at 21.91, CVS Health 30 at 60.3, and Unilever PLC 33 at 61.32 for a total investment of $10,002.76. And that's what we had set out with. We had $10,000 and we wanted to invest it and see as to how it performs over a year. Now, let's see what the price of these shares is as of this recording. As of this recording, KDP is trading at 33.67 for a value of 1,685. JP Morgan Chase is currently trading at 264. AT&T is trading at 27.8. CVS Health is trading at 64.04. And Unilever PLC is trading at 63.84 for a total portfolio value of 11,131.42. However, that's not all. Since the time we had made this portfolio, we have got dividends that is available to us in form of cash for a total of $247.72. Added to the portfolio value gives us a total portfolio value of 11,379.14, which is much higher than our investment. Putting it graphically, this is how it looks. The blue line is our investment, and the orange line is the current value of the portfolio. Now, it's very important that you understand that the dividend serves as a moat for us. It's a protection for us, which is where, in case of some situations where the market fluctuates, like at this time when Donald Trump had announced significant tariffs, the market went down. In the beginning, since the dividends were low, we went down for a few weeks. However, we came back up, and now we have a relatively large dividend that is collected, that is available to us in form of cash. At some point of time, we will buy more shares and increase or further enhance our portfolio. So, very important, value investing, dividends is the way to go. However, like before we end the episode, have a quick look at the dividends that we have upcoming. So the upcoming dividend is Unilever PLC. Unilever PLC will be paying out 52 cents per share on 13th of June. We'll collect it and then wait for the next set of dividends for the next quarter. Now, last slide before I end the episode, a quick recap of the dividend investing checklist. Do you understand the company's business? What is the dividend for the current year and the dividend for the past 5 years and the dividend yield for the current year? What is the average dividend for the past 5 years? What is the payout ratio? Is it between 30 and 70 or is it varying? What is the price to earnings ratio? What's the price to book ratio? Does the company have year-on-year revenue growth? Does the company have year-on-year profit growth? Does the company have a positive cash flow? Look at all these factors and decide whether you want to invest in a company or not. With that, we end the episode. Look forward to seeing you in another episode of Dividend Investing Insights. And happy investing.